The best of Money Matters.
Market View on Money FM 89.3.
Hi, I'm Willie Keng. You are listening to Money FM 89.3, and it's now time for Market View, where we take a look at how the Singapore stock market closed for the day, the biggest movers, sectors, and companies to watch. But first, a quick recap of how we started the day. Singapore stocks fell this morning as trade war fears were tempered by US President Donald Trump's latest announcement of tariff exemptions for electronic products. In early trade, the Straits Times Index was down 1%. Meanwhile, US banks' shares have fallen over the last 2 months, with JP Morgan falling 15%, Wells Fargo down 21%, and Citigroup down 24% amidst the post-tariffs back and forth. This comes when big banks are releasing the first quarter earnings season kickoff. Now, how do we make use of these situations? With that, let's unpack all these developments with David Kuo, co-founder at The Smart Investor. David, welcome to the show.
Willie, how are you?
I'm great. Let's dive right in. US President Donald Trump had said that he temporarily paused tariffs on consumer electronics. I mean, this comes after US President imposed the 145% tariff on products like China and threatening tech giants like Apple, which makes most of its products in, the world's second largest country. So what are your views on the recent tech exemptions here?
Okay, Willie. Have you ever heard of the law of holes, HOLES?
No. What is that?
The law of holes says when you find yourself in a hole, stop digging, right? And I think Donald Trump has found himself in a hole. And finally, he stopped digging because ultimately you make a bigger hole and you never get out of it. So I think really what happened over the weekend was that somebody or something happened and Donald Trump finally came to realize that you just can't keep on doing this because it's damaging the U.S. economy. It will damage it even further. It's breaking the bond market in America. It's causing the U.S. dollar to fall. So all of those things together has probably made him realize that he's got to stop digging. And at the moment, he's given us 90 days, or there is a 90-day reprieve on goods coming into America, no tariff for now. But ultimately, I think he will have to start dialing back all of the tariffs because otherwise it's game over for America. Game over on a number of fronts. On the Treasuries front, on the economic growth front, and also on the U.S. dollar front. So I wasn't entirely surprised. It was just a question of when it was going to happen and how it was going to happen. And it happened through a tweet. He didn't even have the decency to announce it officially at the White House. He just hid behind one of his social media posts and just made the tweet. And then is everybody supposed to run their business like that? Just constantly monitoring social media to see what he says? I mean, this is ludicrous. It is not how you run a government, Willie.
I think from what you said, David, it's pretty interesting. I mean, if you see how the tariffs are going back and forth, do you think investors are getting fatigued from all these tariff changes? And how long, do you think this will last?
Well, I'm getting tired of it, aren't you, Willie? Well, the thing is, I just get on with my life. And what I did today was to go out and buy more shares because ultimately, Willie, I am an income investor. And so consequently, what I need to do is to go out and buy income. When share prices are high, it costs me more to buy every dollar of dividends or distribution. When share prices are low, I get a chance to buy them cheaply because I'm not looking over the next 4 years. I'm looking over the next 40 years. And in fact, I'm looking over the next 50, 100 years because, these shares that I buy are not only for me, they're for my children, they're for my grandchildren whenever I get any, my great-grandchildren. And so ultimately, I'm investing for the long term. This will just simply be a footnote in stock market history. We'll just sort of say the world went through a crazy period for 4 years, and then now we're back to normal again. So it has to stop, really. It really has to stop. And I think what Donald Trump realized was that people are going to be phoning him up and begging for an interview with him. But I think what's really happened, if you have a look at what President Xi Jinping is doing, he's going on a trip around Southeast Asia. So people are just getting on with their lives and saying, you do what you want in the White House, you go and play golf, you do what you want, and then the rest of us are just going to get on with what we are supposed to do. And he also saw what happened with Apple. Apple airlifted, 600 tons worth of iPhones.
Yeah.
So I think most companies already have a plan B, a plan C in place. And so he can slap on whatever tariffs he wants. And people will just eventually sort of say, right, okay, the doors to America are closed, we'll just go somewhere else.
Well, speaking of slapping these tariffs here, I mean, if we look at U.S. banks here, if you focus on corporate news, U.S. bank shares have fallen over the last 2 months. I mean, JP Morgan is down about 15%, Wells Fargo sold off about 21%, Citigroup is down 24%, amidst all this post-tariffs. Just want to get your views here on the bank earnings as the first quarter earnings kick off. What are your views here? I mean, coming from a point of view as an income investor.
Well, the thing is, we heard 3 banks report results. But as I said last week to you, Willie, it's not the bank results that are important because, I mean, this is all backward looking. And so what we need to do is to actually sort of focus on what these bank chiefs are having to say about their business. And I think in general, most of them are in unison. Most of them are saying that tariffs are bad, tariffs cause uncertainty, tariffs cause businesses to hold back on investments. And none of these things are particularly good for the bank. And I think they're also making some provisions because they know that if this continues, there will be some businesses that won't do well. We'll be hearing from 3 more banks next week. And so we'll just have to go and see what is going to happen. But, today was a bright spot, particularly for banks. And I think if we get 90 days of a tariff reprieve, we may get even more. But even still, I mean, if you're a business and you're given a 90-day reprieve, all that happens is that you'll delay your decision-making for another 90 days, particularly those in America. I'm not talking about those outside of America. As I said earlier on, people are just getting on with their lives. But, yeah, we're going to be hearing from 3 more banks, and let's see what they have to say. But I think it'll be the same thing, more of the same. But too much uncertainty, not great, and they will just have to make more provisions for bad debt, and in particular consumers, because I think consumers are going to get hit, and maybe some of these consumer-facing companies we would like to hear from also, Willie.
And speaking of consumers, we are looking at healthcare stocks. I mean, if you look at some of the healthcare companies which are reporting earnings or have also reported earnings as well, do you think they are able to hold the fort in this market volatility? And do you think their so-called defensiveness can still be retained during this time?
Well, there is no choice. I mean, if you like me, I mean, you don't need them, but I need statins in order to sort of keep my cholesterol level at a certain level. And unfortunately, whatever it costs, I'm going to have to pay for it, really. So I think as far as pharmaceuticals are concerned, I think they will be relatively unscathed. And I think maybe the next lot of tariff reprieve will probably come for some of the Indian drug makers because we know that many of these Indian pharmaceutical companies export a lot of their products into America. And the last thing they want in America is high tariffs on pharmaceuticals going into America, which is going to make healthcare even more unaffordable for Americans. So we don't particularly want to see that. So I think pharmaceuticals will be one of those sectors. Healthcare is one of those that I think will escape relatively unscathed from an economic downturn, not just in America, but I think around the world, because we need pharmaceuticals, and nothing is going to actually stop that from happening, really.
But let's turn it down and move back into the region here, David. Just want to ask, how has the STI fared so far for today? Who are the biggest movers and any surprises that got your attention?
Well, I mean, it's been a great day for the Straits Times Index, and I think, it's been a great day for stock markets over here in Asia, and I've just been having a look at what is happening over in Europe, and they're also doing very well. What isn't that surprising, really, is that many of the REITs, the retail real estate investment trusts, they have had a good day today, and I think that is primarily because they think that with maybe the tariffs being put on hold, there is less likelihood of interest rates having to go up. It's not going to be as inflationary for America, and so therefore maybe the Fed doesn't have to do anything too drastic, such as increasing interest rates. So REITs did well. The banks also did well because I think that level of uncertainty has been removed to some extent. So I think if you have a look at the main market in general, there are only just about 4 or 5 stocks that were in the red. The rest of them were in the green. So if you are somebody who is a buy-to-hold investor like myself, Willie, I mean, it's been a good day. Well, it's actually not been a good day because it means that if I have to buy shares, it's going to be more expensive. I preferred it when it was cheaper, Willie.
Yeah, exactly, like you're buying at a discount.
It is like going to the supermarket and finding that steak is on offer. And I just said, yeah, show my freezer.
Now, I just want to touch on macro events here in Singapore. MAS says that it will ease its policy slightly and also lower its inflation forecast. David, I just want to get your views here on the central bank's decision. And also, is it a sign of lower growth in Singapore ahead?
Yeah, I think that is what the Monetary Authority of Singapore is suggesting, that the tariffs are going to have an impact. I mean, Singapore is an open economy. We do a lot of exports. And if there are going to be tariffs on goods going into America, it could cause some kind of economic slowdown here in Singapore. And if the banks don't do well, I mean, finance is another big sector here in Singapore. So things like electronic manufacturing, finance, insurance, if they don't do well, then it's going to hurt Singapore to some extent. Is there going to be a slowdown in growth for Singapore? I think MAS has already revised down the economic growth forecast for Singapore. So it's not entirely surprising. Let's just hope it doesn't actually sort of go too far and go into some kind of recession. But generally, Singapore has got a couple of levers that it can pull. And consumers, from what I can tell, are still relatively resilient. So consumer spending is a big component of GDP. So even though exports or net exports may be a little bit on the weaker side, I think consumers, you and I, really, they have to go out and spend a bit of money, eat a little bit more food, and I think that will help Singapore try and overcome any sort of severe economic downturn. The same may not be said for other economies in the world where a lot of people might be heavily indebted. But here in Singapore, I think most people are reasonably comfortable and reasonably sensible, and we have been reasonably sensible. And so I think there will be a slowdown, but I don't think we're going to go into any kind of recession. Let's hope so.
Just one more question here before we let you go, David. What's on your radar for the week?
Well, two healthcare companies, Johnson & Johnson and Abbott Laboratories. I want to see how these companies are faring. I'm betting that they're going to be reasonably okay. And as I said earlier on, healthcare is one of those sectors that you can't really sort of do without. And so in the case of Abbott Laboratories, I mean, they're pretty big in the diabetes field. They're also in the health supplement field. And so I think those kind of companies are going to be okay. And I think Johnson & Johnson, who are at the forefront of pharmaceutical research and also consumer products, I think they are going to be okay as well. And both these companies are great dividend payers. So anybody that loves dividends should really sort of give these two companies a look and maybe sort of consider having some kind of opinion as to whether or not they are likely to continue. And I think so. I think they're going to be great. And, of course, the other thing I'll be looking forward to is Chelsea. Not that great the other day. We only managed a 2-2 draw. No, 2-2 draw, of which one of them was an own goal. But never mind. We'll have to see how the season plays out now. That'll be my focus, Willie.
Yeah, and for my focus, I think, is to look at sports where the balls get smaller over the years for me.
Maybe.
We have been speaking with David Kuo, co-founder of The Smart Investor. Thank you so much for your insights, David.
Thank you, Willie. Thank you.
Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.